Traders Anthony here. I'm looking at the dollar Swissy on the daily time frame. I just want to point a couple of things out here. Actually, if you go through my videos, you'll see down a bit further a dollar Swissy idea. And in that trade idea, I talked about going long back down in here. And quite specifically, I marked up these two shaded zones, target areas. Interestingly, see how price reacted around both of these levels. And I want to show you this. And look, it's not rocket science. It's really simple. This is how I look for my targets. I'll just get rid of that for a second, the Fibonacci. And it's just a simple matter of going back and looking at these previous price swings, marking up the high or the candle wicks, or above, at least above the these swings, and projecting them forward as potential targets. The next port of call is going to be these, and if we go further left, these guys back in here. So it's a really simple process and quite effective, as you can see how price reacted around these targets. So that's the first thing. I've got a bit of a roadmap here in terms of a bullish bias and potential targets moving forward. Now, the other thing that, just out of interest, fascinates me. Have a look at this. We grab Fibonacci and we pull the Fibonacci from price swing low to swing high. Have a look at, see this 50 here and up here, 100. This is projected from this 100 down here on the fib and this 50. Interesting how these two levels come into play time and time again. It's a simple concept here. If we pull a swing low to swing high and we pull back into the 50, 50% is my threshold in terms of getting in at a discount. And then we project that forward 50, we get an A, B, C, D measured move. And I've just pushed it forward another 50. This is not my concept. It's an ICT concept. He uses these levels for targets. And if you don't have data on the chart, for example, looking at Bitcoin at the moment, or anything that's pushing into all-time highs or lows, you can use the Fibonacci, these 50 and 100, minus 50, and well, I'll show you what I've done here. Open it up. You can take a snapshot if you like. I've got minus 0.5 and minus 1 will give you the levels. That's my fib. So that's that. But, more importantly, where to next? That's the question. We're seeing this retrace now. And again, I'll mention the bottom line for me. Look, I could even pull a fib from this bullish order block low. There's nothing wrong with that. We'll do that. The bottom line for me is price has to crack this 50. This is a discounted zone under here. So I want the entry point around between the 50 and the 61.8 fib. So you can see how I've got these colored light blue, the 61.8786. That is a real sweet spot in there. So if we see this pull back down into this level, I like the 50 to 618. I'm good with that. I'll look for a buy. But price has to shape up. It has to invite me in, and we'll have a look at that. The other reason why this is an important level is the fact that, well, we've got this bullish order block under here prior to this rally, this red candle, right? But directly above that, we have this thin green candle, and there's nothing left or right of it between this range here. So we've got the low of the candle on the right there, we've got the high of the candle on the left here. So we have this bullish imbalance, that would be considered a valid target for the banks, basically. Now, it may or may not travel down this far. It just depends on how they're working their orders and how this range through here has shaped up. But I think my criteria would be a pullback down into this level. And what we'll do is we'll go down to a lower time frame, and I'll show you exactly what I'm looking for. So I'm bullish, provided we get something like, let's just go down to a 30, something like this. All right, so we can see on the 30-minute now the retrace, and my markups are here. So this is where I'd be interested in getting involved. What I want to see here is something like this. I'll point this out. Yeah. All right. See this range? Just pull it through the candle bodies. Candle bodies. All right, we get that. And what it creates, see, we've got, actually it's a triple low, but a double low, or relative equal lows, is double bottom, triple bottom. I'm always going to be looking out for that. That's the first thing. I want to see at least a double bottom. The next clue to this is that. And I mean, that this price action trumps everything as far as I'm concerned. It's king. And I take no notice whatsoever of anything else. What I'm looking for is this. Let's just draw it on the chart here. Okay. Wiggles around. We get a balance area, a bit of a fake out, shake out, and then we get the trade. So the balance area builds liquidity above and below the range. Smart money is working their orders in here, and they need liquidity, right? What they'll do is then they'll spike it above the range, and that'll draw buyers in. More sell stops go under, and then they hit the lows, they take out these stops. This was a bit of a surprise. Okay, we didn't see the pullback, this thing here, but I would generally be looking for just how this breaks structure. So we got a shift in the trend, and then we get the break of market structure, that kind of thing. But looking for the retrace, the breakout, retrace, and retest and fail of this range, or at least the next leg up. And that's your entry point here, and we're off to the races, right? So that's the kind of price action I'm looking for. So and look, that tells me that smart money is getting involved. And I mean, obviously they are here, especially with this displacement, with this move after this this price action. So what you want to be looking out for is going to be something fairly similar. If we just knock that on the head and we go over to here, okay, so I've mapped out my point of interest, and it's, and we can see this trending down, lower highs, lower lows, getting a bit of a double bottom potentially here, but I'm really not interested unless I want to come down into this imbalance. And that would be a key level for me. So what I'm looking for is basically this. All right. Price works its way down, and then it ranges sideways. We get a bit of a fakey shaky, and then we're away. All right. You want to wait for that to set up, and then you want to see the same thing. Really, it's just they take it up, they build liquidity, further build liquidity under here, and then they hit the stops, and then this move, retest and fail, entry point 1, entry point 2, break of market structure. And you want that setting up around key levels like an imbalance or an order block. basically. And I mean, that's pretty much it. That's the keys to eternal wealth, basically, that I've just handed you here. But not my concept. Thank you to ICT. And yeah, I mean, that's the play that I'm looking for. All right. So what else can I say about that? I mean, look, unless this shapes up, there's no trade. And I mean, the way to know to get involved is, well, lower highs, lower lows, and then you see the shift, and you see these higher highs, higher lows on a 15-minute chart if you want. Okay, so you want to see that shaping up out of a level of away from a big level of support or resistance, but mainly, an order block or an imbalance like this. Okay, guys, that's my take on the dollar Swissy. Love to hear your thoughts. Definitely comment, share the love. And with that, I hope you have a fantastic day. Safe trading, and see you in the next video.